Welcome, everyone. My name is Matthew McCora. I'm going to be your host for today's event. Excited to be here with each and every one of you. We're going to go through a journey today. It's going to be down to the point. My goal is to make this as simple and repeatable of a process as possible to identify the most likely next stock breakout. Now, you can use this with exchange traded funds too and other major market class investments out there, but we're going to keep it simple with a breakout pattern that you can apply across every major type of market. So effectively, we're going to take a deep dive into some of the basic foundations that provide the keys to a breakout, meaning a stock that's going to move 7, 8, 9, 10, 12%, even 20% in a singular direction. Now, to get there, I'm going to spend some time on the charts. I'm going to walk you through and share with you, with all transparency, all of the different indicators and tools that I use to recognize these moments of time. But before we get there, I do want to thank you for spending your time with us. We're going to get through the majority of the presentation in around an hour and 10 minutes. Any time after that will be bonus time for any additional questions you'd like me to dig down further into. But let's make sure the system's up and running. Let's just make sure that the audio and video is fully engaged. You should see a webcam. I'm with you live. You can hear my voice. And of course, you should see a slide that says sound check in front of you, just telling you and showing you where to communicate with me. Now, it is private, and we do that intentionally. People put in their personal contact information for additional questions, support, things of that nature that I feel it's not important to have it shared to the open general public out there. So that's also good because you can ask questions, have no worry about somebody trying to jump in there and bring any type of negativity towards your questions. So rest at ease there. Now, based on this, let's see, we got Big Neck, Yulia, we've got Trader says good to go. And I won't go through everyone else's name just to keep us driving forward. Hey, Claude, always a pleasure to see you. Yeah, I recognize a lot of you, so always a pleasure. And then for those that I've yet to meet, it's definitely a pleasure to have you. But I'll give you more of my background here briefly, just so you know more about me, and then we'll get into the fun stuff. So now that everything's up and running and checked, don't worry about interrupting me at all. In fact, I want you to start thinking as we get up to the meat of this content today. I want you to start thinking about some stocks that you've been thinking about. You know those stocks or even ETFs that you've been watching. You're just not quite sure when the go moment is. Maybe you're not quite sure, when is the opportune time to jump into one of your favorite stock symbols. Keep those handy, keep them at the top of your mind. I'm going to ask you when we get to the charts to give me your stock picks, and then we'll create a custom watch list for today, and we'll go through it as a group, and I'll use that as our basis to teach the momentum and trend patterns. So I'm going to give you full transparency. Nothing's going to be hidden. You're going to be shocked to see how I use common domain indicators. There's nothing proprietary about them individually. I would say the way I put them together and the way I teach the methodology would be viewed as proprietary, but the tools I use is available across any type of charting software, free, paid. I hate high cost software. It's just something I think is irrelevant. You'll know why when I get to my background, but you're going to have everything fully laid out. Now, what I'm going to show you is just some recent trading examples. Now, what we do is we take stock patterns, we identify a breakout, and then we find the best option chain to trade, right? So you could trade the stock outright, or you can follow along with the option signals, right? Because ultimately we're here to drive trades, drive profits, drive returns. This is an example of Pepsi. We identified a breakout opportunity, and this was a short move, meaning a bearish move. So once I identified this, I sent this out to my traders of the Rapid Profit Method group and gave them this trading idea that they were able to follow along, and this one generated 82% profit in just a few days. You're going to see by the end of this event exactly why this showed a breakout, and you're going to know precisely how to find them on your own. Okay, but on the left is just an example of the details gone into every type of trading decision, all laid out in front of you. You know the symbol, if we're going to buy a call, buy a put, the expiration to select, the strike price. If you want a limit on the premium, I give you a high probable premium limit to use so we can protect our costs. And then of course you have the go moment data, which is the stock trigger price, you know where to get out, and you know we always have a stop loss. Here's another trade from Devon Energy. This is buying a bullish breakout for 94% profit in 33 days. And as you can see by the dates on the bottom, these are recent. This is not months and months and months old. You know, I've been in presentations like this in your shoes and seen, you know, a teacher or a coach like myself, and you know they're showing trades from months and months ago. All right, so these are all recent trades. This is a breakout on Duran Corporation, another energy related stock, 120%. This is gold. This is the stock symbol, GOLD, not the precious metal. This is a mining company, another put. Okay, so it's a bearish breakout. Here is new holdings. This one really took off. This is a 1-day trade for 96% profit on the option trade. So once again, I'm going to show you how and what made these set up to break out. I'm going to give you that formula today, but I like to just give you a sense of what this type of strategy can do, even in this tumultuous market that we're in today, right? It's very choppy. So, but being able to focus in on breakouts, having predefined profit targets so we know when to get out, and then also having a stop loss to manage risk. Just in the last few weeks, we've captured over 367% net, and that's in closed trades. That's not open P&L, those are closed trades. So the way net profit works is it's able to be individualized to you. So look to this example of 367%, and what you do is you take your average investment. You know, in this example, I said a $3,000 investment. So for example, if you took the Pepsi trade and you put $3,000 worth of option contracts into that trade, then the profit is a multiple of that 3,000. So for the example of $11,000, that would mean that you invested $3,000 per trade. So you take 3,000, multiply that by 3.67, which is the multiple, and that's what you get your return. If you had $1,000 per trade, right, that means you'd make about $3,600 in profits. Okay, but I show that in a way that to me is more real than just showing you a beefed up profit number that includes your investment. You see, this does not include the initial investment itself. So this strategy I'm going to share with you can work on red days, green days. Okay, ultimately, I've got to show this disclaimer because it's my responsibility and I have to, but ultimately this is the disclaimer that says trading in the financial market carries risk. That means you should only use risk capital. That means if you do lose, and you can lose in the financial markets, right? You can lose your trade, you can lose your account if improperly managed. I want to make sure that you keep food on the table and of course the roof over your head. All right, so it's just something that have to be said. You've seen this before in any type of event like this, but just remember, let's be smart with our money and make sure that we always have money management in mind. So what we're going to zero in on today is simple and repeatable steps. In fact, I'm going to share with you one of my favorite checklists that literally breaks down this process step by step. And in fact, you can take a screenshot inside of GoToWebinar and keep it as your own. Right? Everything you're going to see me do today is upfront with you. I don't use any algorithms or any fancy software in the background driving these decisions. What you see is what you're going to get. If there's any questions about the setups and how I have my chart template laid out, that's what I'm live here for, is to answer those questions for you. I like everything to be upfront. So ultimately, what you see, I see. What I see, you see. And that's how this process is easily taught on my side. Now, of course, with this, I'm here to empower you. My goal is that you walk away with at least one new way to look at the market, one new advantageous viewpoint that can help you take advantage of these markets, right? That's my goal, is to empower. The end goal in mind is obviously to make a return on investment. Initially, you're spending time with me. I value that time. I want you to get a return on time today, so that's why I'm going to spend a lot of time, in the majority of the time today, teaching and answering your questions and walking you through this way to identify breakouts so you can get a return on time at a minimum. If you like what you see, then I do offer a full service trading signal program under the label of the rapid profit method, which is a combination of signals, like I showed you on those charts earlier, paired with educational content and live trading room support that you'll have access to. Okay, so if you want more, obviously, you know, I can provide more to you, but my first goal is to get the empowerment dialed up so you can actually get a return on your time with me today. So for those that are unfamiliar with me, if you haven't seen me in these events or any other event in the marketplace, I've been in this industry since 2007. I started off, unlike many of you, I got paid to learn how to trade the financial markets. So I started back in 2007, and that was the last great recession that we had, last long downtrend, right? That was a very long sustained bearish market. That's when I started, right? So I started to learn the markets inverted. A lot of people learn the markets in an uptrend because that's the majority of the time. Historically, is the market's going up, but I learned the opposite direction. So I started off at the time, one of the largest financial education trading technology companies. I started out just like I'm doing here now, teaching and coaching in different webinar events. We were some of the pioneers early on in providing online education in this industry. But over my time, moved up to become the chief revenue officer. That time as a chief executive officer of the company, responsible for revenue, was a love and passion of my life at that time. It gave me tremendous insights into what really is there to provide support for traders, right? What type of tools, techniques, strategies, and what are some of the pitfalls that traders face, retail traders. And so over time in that role, it became more about revenue and less about client success. And so I ultimately just got burned out of that high pressure environment. So I decided to step away back in 2018. Took about 6 months off. At the time, I had 2 small children. They were 3 and 4 years old. And I decided, look, I don't want to miss out on their early ages, and I wanted to be an actively engaged father. And so timing was perfect. I said, look, now's the time to make the leap. So I took about 6 months off, but then had that burning desire to get back into the financial markets. So I decided at that point that if I was going to do this again and to help traders like yourselves, I would do it a different way. So I went out and realigned with some of the close business partners and experts in this space that I had a great relationship with, and we formed a partnership. And that's where Concordia Financial Exchange was born from. And so what you're going to see today is a different perspective built upon hundreds of millions of dollars worth of product sales in my career, and all the different trials and tribulations and access to client support representatives, client data. You're going to see some of the ways that I found to overcome some of those difficult aspects of trading and some of the most simple and straightforward processes today, right? So that's where I come from. That's my story. I'm here because I think there's a way to teach retail traders and to provide that empowerment without huge software costs, without spending months and months and months trying to figure something out. What I'm going to share with you today is a simplistic approach based upon the basic essentials of what makes the financial market work, which is trading action, right? So buying and selling activity, the data that provides us, and then of course trend direction. Once we can master those, you're going to be amazed to see how you can clearly see how to forecast the next market move. So that's my goal, is to share this with you, be upfront, let you see everything behind the scenes as possible. And that's where I get a lot of confidence of that wow factor, that light bulb going off that I think you're going to experience with me today. At least that's the probability. So by the end of this event, to be clear, you're going to know how to identify clear breakout patterns. You're also going to learn about my strategy of setting up entries to basically be on autopilot. So we identify a trade, we set up the trade in advance. So simple way to think about it, market's closed, it's after 4. This is when I start trading, is when the market's closed. So I find and run through my filters, my settings, and I look for lists of stocks that meet criteria that you'll see on a checklist. If a trade presents itself as a high probable opportunity, I then dig deep and find which option chain to trade alongside with that stock breakout. That's all done the day before the next market open. So I set the trades up to then trigger based on specific criteria for the next trading day. So this is done at the end of the market. I find it less noise and easier to manage through and find these opportunities. And then by having our trade waiting for the market to open the next day, we don't have to worry about being in front of the computer and making emotional decisions. Everything's set up objectively, and then we can catch the trade and walk away. So to do all this, you're going to need to see the step-by-step checklist. So I'm going to share that with you as promised earlier. Based on this is what I'm going to provide to you. It's at this time, I want to go to the charts. So remember I asked, get your stock symbols ready. I'm going to build a watch list for us. So while I switch to the charts, go to your question section and give me a list of stock symbols you want me to pull up. So go ahead and put on the stock symbols, and I'm going to move over to the charts. I'm going to remove the webcam too, just so we have more focus on the actual charts and you won't see me in my head bobbing around, okay? So just know I'm still here. I'm just going to pull up the charts. Everyone go to the question section, give me a few stocks you want me to pull up, and I'll create us a special list for today. This way, it's not just me, going through stocks. I know, I always love to see the different types of stocks you're looking at. All right, so while I build this list, this software I use, and this is my preference, you can use any software of your choice. Any of the indicators I use here are common domain. Nobody owns them, okay? These are some of the most commonly talked about, discussed indicators. But this is TradingView, and this is my preferred software. But like I said, you don't need any fancy software to follow along with me. All right, so I got our little list here, and let's start building this out. Let's see, we got Apple, Marvell. You got it, JR. Thank you for your picks. All right, we always get some interesting symbols here. We got Lilac. Wow, some of these I haven't seen in a while. Okay, Twilio, AMLX. We got Tesla, Micron, Applied Materials, Shopify. Oh, I love these 5-letter symbols. Oh, wow, okay. All right, so if you're a little slower on the uptake on typing in, if I see some more pop in here, I'll put it on the list. Oh, we got ENB, Enbridge, okay. I like your style. Suncor. Yeah, all right, perfect. All right, so I think we got a good list here. What do we got? So starting off with a simple list, this is what we're going to use. So I'm going to walk through these picks of yours, and this is what I'm going to use to walk you through the momentum breakout process here. And then we got ESL with the NASDAQ, the Qs, the QQQs. All right, so list closed. I think we have plenty here to work with. As mentioned, if there's more, I'll do some Q&A about 15 minutes after, just in case you have additional questions on the process. All right, so what we're seeing in front of us now, this is Apple. Okay, so we're up to the current price. The market's closed. Bell rang about 20 minutes ago. Now, what I'm going to be walking you through is I want you to start looking at a chart up and down, north and south, okay, vertically. Most people think in terms of left to right, horizontal, which is fine, okay? So a lot of people start looking from left to right when it comes to the market. But to understand a breakout, we're going to be looking at a combination of trend pattern above. So I want you to think about breaking this chart into two sides, okay? So cut it in half. I'm going to explain what I have on the top side first. On the top side here, I use a precise and consistent moving average trend line mix. Now, if you're not familiar with a moving average, it's exactly what it sounds like. It is a moving average, meaning it's a rolling trailing average based upon a length of time, okay? Now, I primarily use daily charts. I'm a swing trader, so my average hold times are about 3 weeks. Is the average position, hold time, meaning I get in, get out. Usually it's in a 3-week average time span. Some are faster, some are longer, but overall, over 300 plus trades, 350 probably by now, the hold time comes out to about 3 weeks. So that's what this setup is. So I want you to think about these moving averages and this template as a swing trader template. Okay, so because I'm on a daily chart, this is not scalping. I'm not scalping intraday. So daily chart, I'm using 3 combination of trend lines. That's what these are. They're giving me an average price of a trend. So 10 is a 10-day, the 20 is a 20-day, the 50 is a 50-day. So in terms of trend lines, the 50-day is our longest term trend that we're looking at. Now, of course, there's times where we're looking for a trade for months, quarters, years. The way I look at my portfolio is I break it up. I've got a long-term portion that's for growth over the long term, okay, for 2, 3, 4, 5 years and beyond, right? Core stocks, your Apples, your Microsofts, Amazon, maybe even, right? Some, Teslas. So long term, I believe long-term growth, those are things I like to keep in my portfolio bucket. And then you have my more active trading bucket, which I deem for swing trading, right? So I've got segmented out. This template is for that active side. What this replaces, okay, this is a conscious choice to use mathematical formulas in the form of a moving average to give me the trend direction. This is over a 50-day average. So 50 trading days, that's about 2.5 months worth of a trend. And so that's what this red line is. Now, what this replaces is the skill set, and it is a skill that combines the art and science of manually drawing trend lines, right? Drawing all over these charts, okay, that's drawing trend lines. And so ultimately, there's a lot of pitfalls and issues whenever teaching art, because ultimately I'm drawing, and drawing is a form of art. Now, in drawing trend lines versus a moving average, you may get a closer, a sooner entry, right? Or you may be a little later than a moving average. But to me, the power of not having to, number one, have the skill, number two, have the time to update chart after chart after chart with the latest trend lines, the speed and the accuracy of having a consistent mathematical model like a moving average outshines the 1 to 2% improvement to trend, okay? So think of a 50-day as your long-term trend, and what we're looking for is, number one, where is the price in relation to the long-term trend? In this case, it's a 50-day. So when I see the price down here at 138, 139, and I look to the 50-day average price has been higher, right? So that means over the last 50 days, the average price for Apple has been $157.80. You can see it in this data box, right to the right of the indicator. Well, if we're trading at 138, well, then that means we're almost $20 below the last 50-day average. That is a downtrend. That means the price is trending down versus our average. When we come back and we see in mid-July, the price closed at 150 and the 50-day average is $143, well, that means we're now trending above. We're above that average price, okay? What we look for in breakouts is the ideal place to enter and to have the maximum movement. The maximum movement of that stock is typically found at the point of reversal. So when we go from down to up, like this instance of the market, that's where we want to identify a breakout opportunity. When we go from up to down, like up here, that is the ideal entry on this movement down. And you can just see this is Apple, and I'll pull up these other stock symbols in a second, and you'll see how much of a move occurs in these trends at that point of reversal. So if you had a way, number one, to identify this trend change, if you had a simple way to be able to find them at the moment on that day of the reversal point, right, that right there is going to help you catch the maximum movement to follow, okay, just by its own right. So that's one of the advantages as well, is to use a setup like this, using a moving average combination, is that I can actually tell TradingView based on using filters to find me specific stocks based on these patterns. Okay, I'm going to dig into that a little further. I just want to walk through that. I can actually tell Stock Screener in TradingView or any stock screener. You know, there's many free versions of stock screeners. If you have TD Ameritrade's Thinkorswim like I have, they have screeners, right? Every broker platform has some sort of free screener access that you can use my settings and find opportunities for your own. Okay, that's some of the benefits here of using this standardized pattern alignment up top. Okay, so if we go to like Marvell, what's the trend? Are we in an uptrend or downtrend? We're in a downtrend. So very quickly, we can recognize. Now, Deer is in an uptrend. We just flipped. We were above the 50-day, came back below it, and now we're back above it again. Okay, we're at a moment of a pending reversal back up again. Okay, you see that we should all see the market through the same lens. So Javoy Global Limited, OTC stock from one of our viewers here, we're above this 50-day, so we're building an uptrend here. Lilac, this is Liberty Latin America. See how we just broke above the 50-day? That's an uptrend. Twilio, we are in a downtrend, bouncing down off that 50-day. AMLX, uptrend. Tesla, downtrend. So very quickly, we have several hundred people in this room, and we're seeing the market through the same lens already. Now, you may not be convinced yet of the 50-day, but based on what I taught, we're below the 50-day average. And if I go back and scroll out here, you could see the market direction when we're below or above what it looks like, and that's Micron. Micron's below the 50-day. Applied Materials, okay, downtrend. Shopify, downtrend. Right? So this is what I said earlier. You see what I see what you see. There's no subjectivity to math. It is the math of the market. Suncor flipped up, came back down. Okay, I'm gonna show you that sideways, but ultimately we're below the 50-day again. NASDAQ's downtrend. Okay, here's the NASDAQ. So the other trend lines, what they give us are additional confirmations, and they give us added dimensions of support or resistance. Okay, so when we look to a trend line, all they are representations. When we're below it, this is resistance. Okay, so trend lines are angled or diagonal levels of resistance and support. You'll see this market reaction bouncing down off of this 50-day moving average back here. Okay, that's resistance pushing down. Right? When we flip from down to up, you'll see the price action come up, come back down. So what was resistance turns into support. And then you see this surge up. Okay, same thing on the down move. So what was once support, once we cross below, you start to see it act again now as resistance to keep pushing it down. So when I introduce these other time frames, so I'll start with the 10-day, it's the same effect when I turn off the candlesticks, where we look to a candlestick as being the most recent and relevant data because a bar forms, you know, in this example, one day, right? So every day we're getting a movement change. It could be up, could be down, could be sideways. Well, the 10-day is a shorter length of time than the 50-day, right? So ultimately, when the 10-day crosses, it's usually a few days behind the bars. But the same action happens on this 10-day average when you look to compare that to the 50-day. So when we come here and look at, you know, the end of July and the 10-day moving average, the average price over 10-day span is $150 and the 50-day is $143. So if we have the 10-day above the 50, right, that means our most recent trend is bullish. And then eventually when it crosses back below it, as we are now, right, that means the 10-day trend is also bearish, right? We're able to pick up multiple confirmations. So when I pull back up the candlesticks and zoom in here, you'll see how the 10-day is acting as support throughout this uptrend, right? You see this bounce. So market comes up, comes down to the 10, finds a trampoline, support holds, we get another extension. Well, then eventually what happens is this 10-day turns into resistance. So once we break that 10, you see how we start bouncing down off that 10-day. So this allows us to see not only what's the long-term price action compared to the 50-day, but then we get that inner close trend line to help us navigate the potential end of a run. Okay, so it's one thing to know the reversal point, but then it's also extremely powerful to know when that trend is about to end. Okay, so that's where we start to layer in these trend lines together. Now, the 20-day, I'm going to get rid of the candlesticks for a second here. When we look to the 20-day moving average, right, now that is the middle trend. So the 10 is going to react faster than the 20-day. So you can see the cross of the 10 over the 50 was on July 14th, but the 20-day did not cross until the 19th. So what happens is we build up additional levels of support with this intentional lag. You know, it's funny when some people talk about indicators, they have a negative context based on the fact that they're lagging indicators. Well, based on my experience, anytime I look back in time, could be using an indicator, could be using RSI stochastics, exponential moving averages. There's so many different indicators out there. They're using previous data to create a data point that we're using today, right? They're using some sort of historical, could be recent, or could be previous data, right, to give us some data point to leverage for the next forecast, right? We're using something of the past to determine what's going to happen next, right? So to me, every indicator, almost every piece of analysis is lagging. But the intention here is that they also give us, by introducing a middle trend, now we create additional support resistance levels. So watch what happens here on this reversal. I want us to really look at, and I'm gonna use the back in time machine here, and I want you to see how the candlesticks and the price action react with these additional moving averages here. So we have the initial reversal point here, right? We start to switch directions with the price going down. Now, most reversals come with a test, right? So the bears want to break down and keep going lower. The bulls say not so fast, and then you get this retracement, right? That's what creates a extension retracement. So we have the initial move, but then we see the bulls attempt to reverse this back up again. But what happens is they run into resistance. So knowing that this 20-day is above price, that means that is a point of resistance, weighing down and keeping down this price. Being able to recognize that would give you the insights to expect the probabilities just to keep going down. So because we flipped here, dealt with this retracement, now we ran into resistance, the probable move is down, and you can see it react off of that 20-day. Then we are now below the 10, and now you can see this 10-day here acting as resistance and start to separate itself. Where does it come back to? It's coming back to the 20 again, finding resistance here. There's another resistance point. The farther this goes away from any of these trend lines, the likelihood to come back becomes high, right? As you see here. Then it's coming back up. That's another resistance move. So when you see price bouncing down off a 10-day, right, the most recent trend line, that should spell to you and give you a definition of how strong that trend is. It's not even retracing up to the 20-day. Okay, it did up here, but it's then since now separated and started to move farther out from it. So where we sit today is that we have extreme resistance on top of Apple right now, right? You can see this reaction, and at the end of the day today, we are back down to these previous lows we saw in the end of September, okay? So as I flip around here, when you start pulling up any chart, you're gonna see the condition of that existing or current trend position. So Marvell Technology, semiconductor world, you see this resistance kick back down Marvell. Well, this is actively extending. We're making lower lows. That is a strong bearish market. Deer, we're getting to a point of building support. First thing is we have back last week, actually last week today, you see how we had this first bullish move above the 50-day. As I said before, you then see that retracement. But what did it find? It found support. And now we have bounced back up above the 50-day moving average. So in fact, Deer is set up for the next bullish move because of this pattern we just saw. I'm going to come back to this in a second, but this is an opportunity here that this is going to build up and keep and rally up again. Okay, but I'll show you what that looks like. So as we come in here, you're going to now be able to see where we are compared to these moving averages and understand the depth. See how fast this is moving up? The 10 is not even above the 50 yet. So all we have right now is the latest price action above the 50. Look how far away we are from the 10, right? That's a strong uptrend. Let's go to Twilio. Okay, we are below all three trends. So there's a lot of resistance pushing down price. We have to break 3 resistance points right above us to reverse. AMLX, very strong uptrend. You see how we're above the 10-day, above the 20, and also above the 50-day, right? So we've got support underneath us here. Tesla, opposite. You see how far away we are? Remember I said the farther you are away from that 10-day, the stronger that trend is. Now, ultimately, as a side note, the farther this goes away from it, the snapback is on the horizon. We will only go so far before the market's going to test and come back up to this 10-day. Nothing extends forever in one direction. So that's a way we trade too. It's called a snapback. Micron below the 50. Now, when you see this cross, you see how the 10 is coming up, 20 is coming down, and we're below the 50. This is getting into a sideways movement. So when you have this cross down here, this is a transition. So expect some sideways price action in the near term until we get out of this back and forth cross. It's very weak, right? Well below the moving averages, well below the trend. Same thing with Shopify. Endeavor Mining, looking at some support on horizontal, but from a trend perspective, we are bearish. Enbridge, same thing. See how strong to the downside this is? All of these resistance levels on top of us, making lower lows. Those are active. Suncor, this is the initial move up. This is that initial cross, okay? This is that natural test. There's also a gap here. Okay, I talk about this a lot, filling the gap. Next bullish bar, okay, I'm going to give you a hint here. Next bullish bar with volume is the go moment for Suncor. Energy is about to take off. Energy related stocks, the oil is about to go hyper bullish here within I'd say a week to 9 days. So we'll call it between today and Thursday next week. And that is going to be a run you want to take advantage of. I, of course, will help you, but it's on the horizon. This pattern here is a powerful breakout pattern setup. I'm going to introduce you to volume down below, okay? So the top half, just think about this in a split view perspective. So the top half is your pattern, it's your direction, okay? It's your compass. Below is your energy, okay? That's the fuel, right? So if I'm going on a road trip, I've got my compass, aka my GPS in my car, but you get my point, right? I've got my GPS to know if I'm going up, down, or to the right. And it's only 3 directions we're going to talk about. Up, down, to the right. The fuel on how fast we get there or how slow we get there is going to be viewed below in the form of volume, trading activity, number of shares traded. Appreciate that, Essel. Comment. I like the way you explain things. I'm glad you like it. Spend a lot of time doing it, and I have a passion for teaching. Okay, so let's talk about the energy. What this does here, and these columns, it's irrelevant if they're red or green. Down here, I can make these black. It doesn't matter the color. The color is just a representation of a bullish or bearish bar above it. Remember, I started off today talking about terms of viewing the market vertically versus horizontally. Okay, so I want you to now think in terms of up and down. Each one of these columns down here is measuring the number of shares traded per day. What I've done is I've turned on the moving average input on the volume indicator, and the input is a 20-day moving average, same as the middle trend up top. Okay, so there's alignment and there's an intentionality behind this 20-day and this 20-day here, right? So the middle is both represented on this trend line below. Now, it's one thing to know that today we traded at 4.6 million shares for Suncor. It doesn't mean anything until you have something to compare it to. So the 20-day moving average is our baseline metric. So same rolling average concept found in the moving averages above for the trend lines, but this moving average is focused on measuring the average volume per day. Now today was a lower than average volume. You see the column is below the moving average. In fact, the day before was also extremely lower volume. So anytime you see these bars on top of the moving average, I want you to think of a surge. Okay, that's a surge of trading activity. That's a surge above the average. Now, what I'm going to show you now is how to put the two together, meaning the top half of trend pattern and then the bottom for your fuel, right? How much fuel, how much RPMs, how much torque do we have to break out, right? Remember, the concept is pattern breakouts. So pattern up top, breakout data below. We want them to be in alignment. And I'm going to explain to you that there's a spectrum to volume. There's high volume. High volume trading tells us a story. Low volume, the opposite spectrum between high and low volume also tells us a story too, okay? I'm probably not going to talk about high volume, but I'm sure I'll spill the beans on some of the low volume techniques. So what we're going to do is we're going to go back and we're going to identify, and I'm going to show you what presents itself in front of a breakout pattern. Like, what do we see? What is the likelihood of a pattern that gives us that momentum move? So to do that, I'm going to go back and walk you through by using the replay machine. And I'm going to walk you through exactly how the process works. Now I'm going to show uptrends and then I'm going to show you downtrends. The process is the same, it's just a different direction. So first thing we do is we look to the pattern. We look to the top half. So we were below the 50-day moving average, and I'm going to hide the 10 and 20 first just to clear this up so you don't have to see the other lines for a moment. So you're now going to be watching for reversals. So you're going to see and look for close prices moving from below the 50-day to above the 50-day, okay, just like this. Now, the pattern is showing a potential reversal. But the question is it a momentum? Is it a high energy based reversal? The way we measure that is in the terms of volume. So if I look vertically up and down at where the candle is compared to the 50-day, the pattern checks the box. However, looking down below, this was an extremely low volume day. You see how small that volume was? I mean, it's less than half the volume. Okay, that means it's wait time. It's not time to go yet. We need to have the vertical alignment. We want to see a spike in volume above that 50-day moving average. So we have the pattern, but let's fast forward. You see lack of volume, see this price slide to the right. We're not getting any directional clear movement. Next day comes, we get a retracement, also low volume, nothing reversing. Another low volume day, see the price slide to the right. Then we start to see a green bar show back up, but down below, we are not at a volume. It's not a surge yet. So it's not until we get to this day where you get the go moment. We have the pattern still above that 50-day. Now we've got this surge down below. Type in yes if you see that. You see how we were low volume and then volume popped, bar continued up again. Everybody see this? That is the precise pattern that's going to give us the pending breakout pattern. Slide, slide, slide. We see price start to move up and then bang, there's our volume surge. If you can recognize this, setting the trade, putting entries, exits in place, that's going to be the easy part. But it's literally from that point, you could see what happens to Suncor Energy. I'll play this up for a moment so you can see this, okay? This breakout movement, you could have bought there, right? See, that's the thing. You could have bought that, but it wasn't momentum based. And so you got this drawdown, okay? So if I bought it at 25 and it goes down to 24.70, right? And then it's not until we get to about 26 that we really get the committed movement. You see what happens is down here, you're holding on to something and it's not an ideal breakout pattern. I mean, this could have easily come back down. It could have easily come back down deeper before that secondary move appeared. But by having specific data-driven checks and balances in place, it helps us avoid dealing with this chop or this whiplash that can occur. Now, when I introduce these other moving averages, what you'll start to see is going back to that first volume day, you could see how we had the additional support, right? So not only were we above the 50-day at this point, what else added to this strong propensity to go up was the fact that this 10-day crossed the 50-day. You see it right at that 50-day? So that's why when we combine these all three together, it doesn't help us just understand where we're going to see future support or resistance, but it also helps to give us confirmational support on an initial breakout. And then as that trade continues to move out, you're going to see a classic extension. Then you'll see us start to retrace. So we're retracing back inside of the moving average. We test support all the way back down to the 50. Now, as long as we are above this 50-day, this is nothing more than a deep retracement. That's all it is. It's still bullish. It's just the market's going through a deep retracement. And then you'll see it bounce back up again. And you're watching all these moving averages follow below it, right? There's that 20-day, back to the 20-day again. You see how it's now a sandwich in between here, okay? Up, bulls came out, brought it back over, right? You can see how, I mean, look at this reaction here. So you can see the support literally building underneath Suncor. And then we're gonna get another extension move. So until we get to closing down below this 50-day moving average, this is the buy and hold method that allows us to take profits multiple price points. We could trade the option, we could just trade the stock outright. So as long as we're trending above at a minimum the 50-day, you can see how this continues to go. So it's not until we get to April, so about 5 months into this trend that was set up way back here, right? That was the go moment. That was the confirmed volume shift. So if we go to any stock, so we can go to AMLX, and we'll see the same type of breakdown. Now, the key here is the patience. Okay, so let's go back to this initial shift. Now, this is a newer listing. That's fine. It still works the same. Okay, so we have a pattern shift. Now, we're not going to buy on a red bar. Okay, so that's in the rules, so you won't have to worry about memorizing that. But you can see how we start to build out this support level above the 50-day. Now we get a big bar, okay, but we didn't have the volume spike below. We're waiting for the pattern and trend to emerge. So now we've got just that volume. We got a big green bar. That is, once again, going to get us the support and build up off of that move. So if you had an ability, once again, to find these automatically, right? You don't have to sit here and just pull up any random chart. You're going to be able to build a list of stocks based on this criteria here. That'll put you into a specific list, how often you want to trade, if it's daily, if it's once a week, once a month. You'll be able to pull up a list and run a list. For example, if I want to find, I don't know if there's any on conservative, if I want to find an aggressive breakout, aggressive bullish, you see how I just click on this filter? I've got a list of 6 stocks. So we got Amgen, big old reversal point for Amgen. See the chart on the top? Let's go, Steel Dynamics. Okay, we surged above it. Let's get another one. There's Crocs, came back above the 50-day, volume day below. Altria Group, we just flipped from being down to up. Now, mind you, there's 7,000 common stocks. Based on my settings and my filters, I'm able to drill down and find pattern-based with volume trading opportunities. Now, these are bullish. There's 6 of them, okay? If I want to find bearish ones, I'll switch to a bearish pattern. There's 16 aggressive bearish breakout patterns. So these are going to be the opposite, where we see us coming up above the 50. These are going to be coming down off the 50. Now we're below the 50. Etsy. I got a lot of analysis on lots of stocks. See the bars below? Bars below, Monster Beverage, okay? So remember I said what I see, you see, what you see, I'll see, right? So because we're using a mathematical objective-based pattern criteria, we're able to drill down and literally find stocks at those moments of time. At those moments of time. Without us having to, like I said, manually go through chart after chart. There's literally a list here of 16. It's trip.com, Pinterest, just crossing down below. Okay, see these? So from here, you could short the stock. I don't like shorting stocks. I'd rather buy the put. But now I've got a specific targeted list of stocks at a particular moment of time with a high probable breakout pattern. Yeah, it's a good question from Essel. So I'd like to know something. Which one is better, buying stocks and holding or options trading? Ultimately, they both play a part. I wish it was a simpler answer, but a more simple answer. But ultimately, it's all about, number one, what's your capital available to invest, which I don't need to know, nor do I necessarily have to know what your individual investment size is or personal goals, anything like that. Benefit of holding a stock is that you own the asset. Now, I would only own stocks that you really love, right, long term. But ultimately, what you're going to find is that not every stock is in an active trend all the time. So, clear example now, if we go switch and go to like Apple for example purposes, if you bought Apple when it was 170, 180, all right, well, now it's at 138. Now, the benefit that I think we, the retail traders, have over big money like hedge funds and institutional trading is that we can be more nimble. You know, it's hard to shift billions of dollars of assets around. So what you're going to see as the quarter earnings come out, you're going to see a lot of these hedge funds like BlackRock's coming out in a couple of days. BlackRock's the largest hedge fund in the industry. It's like $1 trillion under management, something like that. You're going to see them have a loss in quarter three, right? That's a $1 trillion hedge fund. They're probably going to be down 20% off those assets under management, right? So what we're able to do as retail traders is be nimble. So for example, if I bought Apple at 180, what I would be doing is running covered calls and making money on those assets as this is going down. The other side of the coin is rather than just buy and hold it and deal with this drawdown, I'd be buying at these dips, building more of my portfolio, of course, at a lower share price. What that does is average out. That's a cost averaging concept. So even though I may have been happy and excited to buy them at 170, 180, I think long term this will get back up to $300, $400. Okay, but in the meantime, if we just stuck to this one single trading price of 170, 180, and didn't take advantage of these low prices, I ask you, if you loved it at 170, why don't you like it at 138? Now, trading options, there's also ways to hedge this movement, trading options alongside the way. So you hold the asset itself, but then you can leverage other strategies on top of it to further monetize your position. So it's not a one or nothing or all or nothing mentality. The rapid profit method concepts that I teach and walk through is about how do we generate profits. Some of it could be buying dividends, some of it could be covered calls. You know, there's conditions that set up for certain types of strategy. But everything, regardless of the outcome of what we invest and how we invest, is based upon understanding where the direction is and what type of stage of a trend we're in, regardless of if I'm trading an option, if I'm gonna cost average. We've got to know the opportune time to roll out any strategy, right? So the base here that I share with you is the base, and then from there we can leverage all sorts of different strategy based on what we see. But ultimately, understanding where we're at is the starting ground for anything, right? It's the starting place. So when I see Apple continuing this bearish down move, I'm expecting this to run into support. Why? Because it doesn't last forever. You don't see these long down moves last without seeing a retracement happen. So where we sit today, you can see where we had almost identical lows from the last week. So what I'm looking for is historical recent lows to target. And those become targets based on Apple, where I can cost average and buy more Apple. Or if I get a good support level bounce, then I can be aggressive and buy calls up into this 50-day moving average. Very similar to this trade, the trade I started off with today, the Pepsi trade. It's called a snapback technique. So ultimately, when something gets too extreme, many of you may have heard the concept of oversold, overbought, right? Well, oversold, overbought is reflected when you see a strong breakout pattern, right? You have a very parabolic move. See how this Pepsi trade, this is back in July to about mid-August, this big extension. So when you see a huge separation away from that 50-day moving average, you see this entry order was a forecast that if the market breaks 178.01 for Pepsi, that it's going to run down to this profit target, which is right up against this 50-day, okay? So what we did is we took that directional movement and then just formulated an options play, which was to buy the put. So instead of shorting Pepsi down from a stock percentage down to 4%, okay, that's what the stock short would have been. We traded the put and made 82% on the option versus just making the 4%. Okay, so that's some of the strategy. So when I see Apple pulling away, any extreme, right? The market's about extremes and timing extreme. This reversal breakout that rallied this bullish move to start from, okay, that's an extreme scenario where we get a reversal, then momentum kicks in. Well, the opposite extreme is when we're at an extreme high distance, okay? That means we're very high, extreme level, spectrum. High spectrum, we're gonna come to the middle. Well, the middle is the 50-day, okay? That's the mean, deviation to the mean. So, but that all starts by understanding trend pattern and momentum, right? When I go to any of these charts, okay, I'm gonna start to show these and pull them up. So here's gold. I told you I was gonna show you. This is extreme data that we collect, okay? So all of this data of knowing what symbol we're gonna trade. Are we buying calls, buying puts? You get all this data up front in the signal service program. I give you the precise entry order. Okay, this entry order, everything here you see is on the underlying stock. Now, a lot of people question, well, why are you using the stock to generate your entry, your profit target, and your stop loss? I get that question all the time. The answer is simple. Options are a derivative of the underlying stock. Derivative means based upon, right? So the premium or the price of the option chain is a derivative of the underlying stock price. So I say in turn, why wouldn't I use the stock to manage my option trade? Without the stock, there is no option. To make money in the option, if I'm buying a put, I'm buying the right to sell this stock at a lower price, okay, at a higher price, right? That's what I'm doing. I'm buying the right or I'm selling the right, okay? So ultimately, I need that underlying stock price. I need the stock price to go down. How fast that goes down, based on the implied volatility, based on the theta, gamma, also the delta, right, are some of the few formulas that impact the premium. But regardless, if I'm buying a call or buying a put, and if the stock does not move, that price does not move, I make no money, okay? If that stock breaks out and moves quickly and goes down, that premium is going to go up, okay? So that's why I always respond with, why wouldn't I use the stock? Now for us, it keeps us above the noise of the 40 plus different ways to trade options, all of the other different ways to decide if I'm going to go in the money, out of the money, on the strike price. If I understand that a pending stock is about to break out or could be an ETF, then I'm going to go down and find an appropriate option chain that gives me the best liquidity, gives me the best potential payout. Then I can decide, do I want to trade the stock or do I want to trade the option? You can effectively do both, okay? So this entry order is the key to this. Okay, so this trading signal was sent out Sunday. Okay, it says Friday, that's the day this bar closed. So Sundays, Tuesdays, Thursdays, I go and identify and find trading opportunities for my trading group. Sundays, Tuesdays, Thursdays. I send them out between 7 p.m. Eastern and 9 p.m. Eastern. So Sunday night. So that gives my traders about 12 to 14 hours to take what I send them and go put it into their trading account. The goal is you always want the trade sitting there before the next day's open. Now, the majority of the time, the trade's good for the next day only or the next trading days. But if there is a signal with more days to keep that trade open, I tell you, it's clearly listed in the signal. So by setting this up, based upon, at this point, it was Friday, but I sent the signal on Sunday, right? Because at this point, Friday, the market was closed. The trigger price is the most crucial price at this point. You see, it's $16.01. What I'm telling my broker is that I want to buy the long put only if gold marks at or below 1601. That would give me the confirmation that this price is going to continue this breakout down. If it doesn't hit 1601, that means the price has gone up. Well, that means this pattern has shifted. I don't want to be in it. So the stock trigger price is the final go moment. So in terms of what happens and what it looks like, let me just show you this on a screen grab. This in front of you here is the aggressive bearish checklist that I just pulled up a second ago. In blue here are the trading view filter settings. Symbol to type, the volume to use, relative volume settings, average volume, last price traded. Okay, so this is what you can put into trading view and have this search criteria for the aggressive bearish checklist. Okay? Or you can put this in any filter settings, any companies you have access to. It makes no difference. It's going to get you the same data. Down here is the trade setup. Okay, so set pending entry, 1 tick below previous bar low. Okay, I like to set 2 profit targets. I'll send you 1, but if you want to trade the stock, I recommend you use 2 profit levels. And then it walks you through how to set the stop loss. Now, if you don't know how to do any of these, I've got a special bonus where I give you 10.5 hours of pre-recorded lessons on how to identify entries, how to identify profit targets, how to identify stop losses. Down here is where you drop down if you want to trade and find an appropriate option to trade. So once again, we're finding the stock breakout, getting an entry, profit target, stop loss. So this is if you want to do what I do, okay? And if you don't, you can just follow my signals. This is where I get the signals from. So this is the delta criteria, open interest we want to see on the option chain. We want to have enough time as a buffer. So our recommendation is anywhere from 45 days to 90 days to expiration. And then you want to have a low spread. Okay, so we run the screener, we pull a list up. I showed you a list of 13 a second ago, right? We're then going to pick the stock that has the best pattern, best profit opportunity. We're going to then plot the targets, like I showed you on gold. We then go down and pick the right option chain based on this criteria. And then we enter the pending trade and we let the trade do its thing. We're objective, we're arm's length away from the emotional decision making. We're objective when the market's closed, we set this up and let the market come to us. We want to catch the breakout. We don't want to chase it. So this is setting your net up, right? So imagine you're going crabbing. I'm from the Northwest originally. So crabbing I know well, right? You put the pots in the water, you let them soak, right? They say soak. And then once the net's cast, right, it's out, you got your pots out. We're looking to just catch the crab that come in. Right, that's catching crab. I don't want to go out there actively fishing with my pole, right? That's actively chasing. Okay, I don't want to chase. I just want them to come to me. That's what this method is. So effectively, we take a signal. This is a signal from a few days ago. So identify and plot the targets. Down here, you'll see we found this stock in our list. Okay, we then plotted our entry, profit target, stop loss. So once we do that, we then translate this into an option chain. So this is the actual ticket. This is the actual setup. So based on that criteria I shared with you, we went in and we picked the option chain. Now this down here is very important. I mean, this is a totally different perspective on how to set trades up to catch breakouts. So you've got, this is an OCO order type. It's a one cancels the other. It's not unique to trading, to TD Ameritrade or to Thinkorswim. I've got clients that use every major broker that you've heard of, Fidelity, Schwab, Tastyworks, Interactive Brokers. I mean, you name it, I have traders that use it. I've got hundreds and hundreds of traders that follow this program. Now, what this does is it, one, sets us up an ability to set an entry. That's what the green is. Okay, that's the buy order. And then these 2 red orders are my sell orders. So I'm able to put an entry order and then bracket a profit target stop loss. all in one single ticket. Okay, this is a set it once and not worry about it setup. Now I give you a limit, I give you all this good stuff. Now, what also happens is we set conditional orders to execute the trade. Remember, everything here is based on the underlying stock. So order number one, this is our entry order. We're telling the broker what to do. I want to buy 2 contracts, November expiration, $42.50 strike. If you want to use a limit, this is the limit you want to set on your premium, $1.75 in this example. But it has a condition to order to trigger the trade. The condition is that UNM marks at or above 41.24. That's the stock trigger. So this is a call, right? So I want this to break out up. So if this criteria is not hit, right, the next day this doesn't get up to 41.24, this trade cancels automatically. We're here to catch breakouts, not chase them. We're looking for that final confirmation of the high getting taken out. That's what this price comes from. Now, if it goes live, if this gets triggered, what happens is these 2 bracketed orders, because that's what an OCO is, one cancels the other. I then have a stop loss that's going to close automatically. And then I have a profit target already set up. So if this gets triggered, I have my predetermined exits live managing this position. This is not, once again, a unique method. It's not proprietary to TD Ameritrade or Thinkorswim. Okay, this is available on every major broker. The benefit to this is, number one, time. The average trader of mine takes 15 minutes or less to take the signal I give them and put it into the trading account. Now, starting off, it's about 15 minutes, but I would say over time, they're doing it in 5 minutes or less. The benefit here is that we're taking advantage of the highest volume period of the trading day, which is the opening session, the first half hour to hour of the trading day. For us that work, I don't look at the markets personally unless I have a class during the day. I don't need to, because I'm not concerned about the day until the day is over. So this allows me to set these trades up and not have to worry about being there to push the button. In fact, I'm making the most objective decision possible at this point because I see a pattern, I'm playing the probabilities, I know exactly my predefined target of profit and stop loss, I know the risk. At that point, if the market breaks in the direction of the breakout trigger, then I'm in the trade, and I know if I go on vacation for 2 weeks or Lord forbid, I get stuck in a hurricane, I lose power for extended periods of time, all of my trades are always protected, always. If at any point I deem that we need to shift the stop loss, we need to move it closer, maybe we need to take profit, I will alert you of that. But at a minimum, every trade is always protected. One of the biggest complaints I ever hear about signal service programs is the fact that you, the follower, can never get the same results as the person you subscribe to. Much of that is just based on how they deliver the signal. They may tell you to buy something, but they don't tell you when to sell it until it's time to sell it. Well, if I know something's going to be sold and I sell it first, it's going to take me at least 15, 20 minutes, maybe a half hour to alert my entire trading group. Sometimes longer, right? That 30 minutes to an hour can make a difference between making 80% or just making 30%, right? So at a minimum, every trade is always protected. So you don't have to come to me and ask what to do. Everything is always managed. You always have stop loss and protective stop and profit targets with you, right? To me, that is how we can get way closer alignment to results, because once I send it out to the universe, it's in the universe, right? There's no self-management behind the scenes, anything like that. So this is a process of taking the breakout and then translating it. Now, of course, I'll do it for you, but if this is a style of trading that you gravitate to, that you think can help you, then I'm going to teach you how to do this every single week. I have live sessions every single week. So I love combining signals and trading opportunities in the signal program, but I really more enjoy actually empowering you on how to do this yourself, because you'll be amazed at how quickly you can pick this up. So once I execute a trade, it looks like this. You see this trade, it's waiting conditionally. And then I've got my waiting to trigger. I've got my protective stop loss and profit target waiting for me. I don't have to do anything. If it triggers live, I'm in the trade. Okay, there's no worry about babysitting, right? I don't want to babysit. I want to be as unemotional as possible. I can't remove it all, but I want to be unemotional to the highest degree. Here's another example. This is a signal from a few days ago. This is eBay. Okay, so we found an eBay short opportunity, delivered this signal out. We're currently in it now. That's the trigger point. You see how we had a pending entry, just triggered. So this is just from Monday, right? So I sent this out Sunday. It's now obviously Tuesday. And we've now broken below the entry, right? So that's a good thing. We want to come down to our 31.78 profit target. So all those results I share with you, this is the type of detail you receive, okay? So you don't have to know all this now. I don't expect you to be a master of necessarily how to input this trade. I'll teach you how to input the trade. But this is what my clients receive. So this is a forward trade from last year. So forward, that's the symbol. We're gonna buy the long call. There's your expiration you wanna select, November 19th, 2021. Here's your strike price. Set it up to trigger the option at 14.96. Set your stop loss at 13.46. There's your profit to exit, 16.04. Full detail. This is the SMS. This is the email. Everything laid out so you know precisely how to put this in your account. You know the necessary pieces to roll into your account. And then down here is what the trade tracker looks like. Okay, so and if you want more data, you let me know, but this is what the tracker looks like. We've got open trades, closed trades, missed trades. So missed trades are ones that don't hit the entry. They don't trigger. So detail-wise, you can see the last trades are here. Okay, that's at 367. Those are the symbol types. So we've gone calls, puts, calls, puts. Okay, you see all that detail. You see the full details of the options expiration, what the strike price was on the signal, the premium limit, the trigger price, stop loss, profit target. You get copies of the exact ticket used, so you can copy the ticket, make sure you've got it all checked off. This trade hit our stop loss for profit. So I'll put the final ticket in. So this is the order that closed out the trade at $3.70. Okay. So this is Revance Therapeutics from a couple days ago, or maybe last week. Let's see. So this is from September 30th, close October 5th. 85% profit. Revance Therapeutics. Okay, there's our eBay trade we're in. Okay. So open trades, closed trades. So if you get the email upfront, text message with all these details, you then have access to this trade tracker inside of your membership area, so you can always track alongside and have a running track record to follow and manage your trades with us. So in terms of identifying these breakouts, to me, what's most important is thinking about keeping things simple. The strategy I shared with you so far is exactly what you see it is. We're leveraging the most time-tested process that makes a stock price move up or down, which is trend and price activity, right? Trading activity. With more buyers and sellers, price goes up. More sellers and buyers, price goes down. When there's no activity, price goes to the right. Now, when there's surges of activity, be it buy side or sell side, that's where you get bigger momentum price moves. I've yet to hear somebody argue different, a successful argument that that's not how the market works. And so that's what this strategy does, is it allows us a lens into what's happening and then where it's happening. It's basically a way for us to follow the money and follow the activity. So there's nothing to download. There's no complex strategies. The basis of an analysis to an individual stock trade is exactly what you see in front of you. What is done to analyze the future forecast of the market is also the same method. Everything is the same. The base of direction and momentum to identify the next movement is used regardless of the market condition, if it's red or green, if it's low volume, high volume. This is what you need to place a trade, right? You need to know what to trade, the direction, where to get in, where to get out, and where to get out for profit. That's what I deliver to you. So you always have the data, right, up front. This is what we've sent out. I just showed you the tracker recently. Since August, I've been sending out option signals of all different sorts, no matter up, down trend, sideways conditions, right? So you've got a long-term perspective of performance, you've got a recent performance, right? So what we do allows you to see and anticipate what's going to happen next, be it retracements, be it extensions, be it triangles, or be it active running trends. You're going to be able to be there within a few days of reversal points. And that's what I find most important, is being at the moment in time. Now, in my opinion, and based on different client feedback, this program is simple, but it's powerful in the method of identifying time-tested breakout patterns. I already showed you on the random stocks that you guys pulled up how you can sequentially see and reverse engineer the breakouts. Well, of course, it's easier to see in the past, but I do that so you can see what we exactly are looking for the next breakout. Now, essentially, I get a few questions every event, so I like to just answer these. So for those that have an interest in this program, I'm going to make this extremely easy and affordable that I can make it. I want cost to be the smallest decision point for this event today. I'm going to remove price as an objection. I don't want anything to hold you back from this. I'll share that with you in a second. So what you need to follow along with this is I need you to have a few hours a week to follow along with me, okay? Placing trades takes 15 minutes or less when I send them to you. I say a few hours a week because I want you to show up to my live sessions with me. That's where I really find that people can maximize this experience and not just be waiting on me. You can actually take advantage of all the different opportunities to trade by learning the method overall. Options experience, the less, the better. The reason I say that is because the more you know, the less you know about options. There's so many, I would say over 40 different strategies, if not more, around trading options individually. Now, if you do come with experience, don't worry, I'm going to really simplify it and drill you down into the most important areas. And if you are unfamiliar with options trading, I've got a bonus. I'm going to give you access to the Options Mastery Academy that we provide that will take you from a beginner all the way to an advanced trader through all the different strategies. So don't worry about that. I just need you to be able to have an ability to trade options. So you just need to make sure you have the basic level of access to your options trading. So you just need level 1 options trading turned on in your account. So that's just calls and puts. Now, when the trading signals get set out, I mentioned it earlier, is Sundays, Tuesdays, Thursdays, between 7 o'clock Eastern and 9 o'clock Eastern is when we send them out to you. So that gives you, once again, 12 to 14 hours to set them up. Now, if there's a time we don't have a trade, I'll let you know in the class, in our sessions, and also on, not or, but also on the trade tracker. It'll say no trade. Now, we won't have a trade until tomorrow. I know today's Tuesday, but we have extremely high volatility planned between tomorrow, Thursday, Friday, based on key economic data being released around inflation. Okay, I don't like to buy into assumed volatility. I want to see the volatility happen and then from there catch the breakout to follow. So at times there's just not a right condition to be trading. I will not trade for the sake of trading. I'm not trying to hit a number of trade quota. I'm trying to deliver profits. So I will not just trade because it's Tuesday. I'm going to only trade because there's opportune moments. I've shared already the different trading directions. We've gone calls, gone puts. All in all, if it's a bearish breakout, we'll be there to take advantage of it if the numbers match up, right? If the checkbox is checked. So regardless of red or green days, we're able to anticipate days of extensions, days of retracements, and then we're going to trade accordingly. Now, the question about what makes this different is twofold. Number one, it's the upfront transparency. I don't say that in a negative context versus someone else in this space providing this product. I say it in the sense of giving you all of the tools, all of the key data up front allows us to already have everything set up. So we're not relying upon me, your internet connection, being available. You know how life is. Sometimes life gets in the way. So if I send you an alert to say, hey, now it's time to close the trade out, and you had no idea how to close it, well, you could get that message an hour, 2 hours, 4 hours, a couple days later, right? That's not, to me, helpful to help you when you need it most. So I always send out full trade signals with entries, profit targets, stop losses. So we always have security. We always have a blanket around our trade, be it profit taken or be it stop loss. That's number one. Number two is the setup of the service, meaning everything is set as a catch. We're setting it up in the evening and then we're looking to catch it the next day. This is different because many programs and many different ways to trade requires you to be in front of your computer. I prefer not to be there and hit the go button because my personality type is extremely optimistic. If I stare at something or research something too long, then things start to look too good, right? I start to make up reasons why it's going to go up. So to me, less is best and less is more. So when I find a trade that I send out, it's typically found, sent out, plotted out, taken to a trade ticket, distributed to my traders in less than half an hour, more like 20 minutes, right? I find that it's going to jump on the screen. So between upfront transparency, knowing you get all complete total details, upfront is number one difference. Number two difference is just the method of setting up and catching, always being protected. So the program itself is very simple. You can follow along and just take my signals. If you want, sit back and just take them. Take just 30 minutes going through lessons of how to place the trades in our membership area and just follow along. That's fine. You can learn how to do this by joining and taking advantage of these special bonuses I'm going to give you today, or you can do both, right? I like you to do both, but obviously time happens, life happens. I think at a minimum, I think the method I shared so far, there's still a ton of you here today, which I love. There's obviously an interest in this. So I'd love to teach you more than just give you trades, but you'll be the ultimate decision maker on that. Now, the guarantee here is for those that aren't quite sure, you think you want to give it a chance, but you're just not quite sure, rest at ease. The theme today has been simple and repeatable steps to trading. Our guarantee is just as simple. It's time-based. There's no hoops to jump through. There's nothing you must complete to qualify, and I'm doing air quotes to qualify. I think that's a very difficult business to maintain if you're holding people back and making it difficult for people to get out, right? So if at any point throughout the first 30 days you're not satisfied for any reason, let us know, email our support team, and then we'll give you 100% of your money back, no questions asked. We like to keep it simple. If you want to part, I'd rather us part as friends than deal with some nasty breakup. Okay, so just know that you have that in your back pocket. Once again, we're talking about making a return on investment. So 367% net in the last few weeks. If you trade $1,000 following those signals, that's over $3,600 in profits in the last few weeks. So if you spent $2,000 to make $3,600 in a month, knowing that you've got another 11 months, that may be worth the investment. But I'm here to give you a special opportunity, and you're not going to pay anywhere close to that. In fact, you could pay 10 times less than that today. So to sign up, I want you to start going to rapidprofitsmethod.com to sign up for the trading signal program. Get your email alerts, get your text message, get your access to the cloud tracker. Now, as mentioned already, I'm going to make sure that you have some special bonuses to help you in your journey. Now, this is for the Investorexpo group, so I love this group. Always have an amazing time with you. So I've got some bonuses here set aside. First bonus is my first favorite bonus. This is giving you access to my Market Pro live session, which are live trading sessions twice a week, total about 2 hours a session. I run on Mondays at 7 p.m. Eastern, and we go to about 9 o'clock. And then Thursdays at noon. So tomorrow we have a class, or Thursday we have a class, excuse me, at 12 p.m. Go for another 2 hours. So 4 hours a week, 52 weeks. It's 200 hours of live trading trading, training, educational coaching as this special bonus. So get the signals plus get my Market Pro Live session for the year. You're gonna have access to my toolbox. I call it the Empowerment Toolbox. All the lessons, over 10.5 hours of pre-recorded lessons on how to identify and use the trend pattern setups I use, how to identify leverage momentum, how to set entries, profit targets, stop losses, how to read option chains, how to set up your trading view charts. All of that is found in the toolbox. All of my traders checklists, all of my favorite watch lists are always updated and available on this toolbox. So I'm going to give that to you to have a kickstart to your success. Options is obviously a very popular method of investing. With that, I want to provide to you access to the Options Mastery Academy, written out, amazing content from beginners all the way to super advanced option strategies are delivered inside of this training guide that we're going to give you today. Of course, money management is extremely important, and one of those facets of the industry that is often under-taught and underutilized is money management. And what you're going to learn with us here and with my style is I love to use multiple profit targets, love to leverage the stop loss to get to a point of guaranteed profit, how to scale in, how to scale out, when do you scale. All of those are found in the Empowerment Toolbox under money management. Those are obviously very important to building the profit method. Now, this is what the Market Pro Live Club is. Live session, okay, so we had one last night. It was a great fun. We've had open enrollment here for the rapid profit method. So we've added several hundred new traders here in just the last week or so. But these sessions are here as your opportunity to grow and develop in the current market conditions. So we track the 30,000 foot view from major indexes, key indicators that we're monitoring across the market as a whole. We'll go over what's on the fundamental economic calendar for the week, so we know where are the days to look for potential volatility increase or decrease. We dive into 10,000 foot views across sectors of the market like energy, utilities, consumer staples, finance. We're looking for areas that are poised to move. I go through a technique of diving into ETFs and the assets under management and find stocks in those different ETFs as well to trade. So tons of value my clients experience in here, from current market forecasts, current market analysis to help us understand what's happening in the near future, to individual stock analysis and trading opportunities. But that's why I love that bonus. Second Empowerment Toolbox, remember all my checklists. These are 4 of my most used. I think there's another 2 on the site that I've used too that you'll have access to, and you can set your screeners, follow along with my step-by-step checklist. The course agenda on the right is the 10.5 hours worth of content around the strategy I share with you today. So you have a dedicated class per technique and per strategy there, so you can really dig in if you want to on how this method can work for you. That's a special bonus. Options Master Academy is what it sounds like, right? This is where we dive into understanding the option trading strategies, how to go through and read through all the different levels of expirations, when to get into the money, out of the money. There are times and places for all of those, okay? So this is where we start to really dive into all the different nuances of the straight calls, straight puts types of trading opportunities. Money management, this is something that I find so powerful. It's obvious, right? How do we manage our money? But more so, the different ways that we can leverage momentum to know when we expect the trend to end. Okay, so this is where we dive into a little different perspective on money management. There's formulas, there's spreadsheets on how to determine your minimum average investment per trade. And then I always add more. You know, that's why this is an empowerment toolbox. Just like my toolbox in my shed, my physical toolbox, I'm always adding tools and stuff to it. Same thing with my empowerment toolbox here. I'm constantly getting feedback from the room. You know, the conditions change, so I'll bring up a certain concept that isn't relevant over the last 2 years, but it's relevant today, right? So it's an ever-evolving toolbox, and that's why I enjoy, you know, that method. So at this point, I'm just going to summarize what this is, and let's jump to the fun stuff. I told you I'm going to take money and make it the smallest reason to hold back today. So rapid profit method, you're going to get the email alerts, you're going to get the text message, you're also going to get access to the cloud tracker. So in total, with all the bonuses, we've sold every bonus and we've offered bonuses. We have people sign up in these bonuses individually over the past several years. Those are real prices. That's not made up. Okay, I know that happens sometimes in this industry. So all you need to join the rapid profit method and take the next 12 months with us is to invest $299 today, and you're going to get access to everything I shared with you for the next 12 months. Now, for those that take action, I told you I was going to make this a sweet opportunity for you. The first 10 who go now to rapidprofitsmethod.com are going to save $100. So if you think $299 was crazy, what does $199 feel like? Now, I get the question as soon as I show this. So before I answer and tell you the question I always get, go right now. I'm going to have Alan, he's here to help facilitating this with me. He's typed in the link right now. Click the link. You've got 30 days. There's absolutely no reason to not give me 30 days. This is way less than the majority of you invest in a trade itself. I know perfectly well the average trade in this room is more than like $2,000 a trade, $1,500 a trade or more. So look at this as a trade. You're going to trade $299. In fact, if you're quick, you're going to invest $199 today. Your goal is to take that $199, invest that into the rapid profit method, the consistent learning track of the next 12 months, and flip that into a profit. Let's just say hypothetically you started 30 days ago and you spent $199, and you look at your P&L and you took all the trades and you had 367% net profit. If you're on the low end, and let's say you had $1,000 per trade, it's $3,600. So if you invested $199 30 days ago and it was able to grow profits of $3,600, with $199 in the 30-day period turning into trading opportunities totaling $3,600. Of course, that's a phenomenal return on investment. Fast forward now the next 11 months, if you started a month ago, right? That's how simple and how affordable I made this. But the only reason this is at this price is because of the large number of subscribers that we have. So if you want to keep this price where it is, then make sure you refer your friends and family members, and we'll be able to pass these savings on. Okay, so the second reason we'll have a price like this, an unbelievable price to many, is because of our infrastructure and how we have set up the support, the content, the training, and the signal tracking is all using technology. We don't have a huge marketing budget. We don't have a huge sales team that's going to pick up the phone and start calling you, right? We leverage partnerships like Investorexpo, other partners you may have seen me speak at before, rather than all this upfront cost. So the more expenses we would have, obviously we'd have to have a higher price. So we keep all that down and rely on relationships across the industry to put us in front of people like yourselves. So it is truly a unique opportunity. We want to set a price level that allows you to focus more on learning, more on trading success, and trying to make up $2,000 in service, right? I know very easily everything that I'm going to give you, everything you're signing up for right now, easily is sold in this industry for $2,000 to $3,000. I've been doing this a very long time. And remember, we do this because of our scalability, our ability to grow via referrals, and partners like Investorexpo. So that's why we're excited to bring this to this room. I've always had extreme I guess fun, enjoyment in being here with Investorexpo. Many of you have seen me here before. So definitely enjoy this group. You guys always seem to be savvy. You always look for opportunities to grow and develop. And I can promise you, for something for $199, all the value I'm going to give you for the next 12 months, this is a no-brainer opportunity. There's zero absolute objections to hold you back. I mean, there's nothing relevant. I know you're going to say something like, oh, time. You're spending more than 15 minutes a day in the financial markets. I've done this so long, and I know if you're thinking about trading, if you're actively trading, or maybe you're sitting on cash, you're reading articles, you're pulling up Twitter, you're following some talking head on some financial news site, right? All I'm saying is rather than just do that, let's devote some time to this, and I can guarantee you, in fact, I've got a personal guarantee. If you show up to one live session with me, be it Monday nights, be it Thursday, do it with the next 30 days. I'll guarantee you, you'll be hooked and you'll love this process. Just give me one session. You don't have to wait 30 days. In fact, show up Thursday at 12. And if you don't like the session, if it doesn't make sense, if you don't see how I can add value in the moment and beyond for the next 12 months, then let me know in that session on Thursday. Say, Matt, I love it. It's just not for me. Tell me in the room and I'll give you 100% of your money back. As you can tell, it's not about the money, right? It's about building a community and actually empowering retail traders. My goal, you may have sensed this, I'm anti-expensive software. Many of the softwares out there, I would say there's only a small percentage. Think of the Pareto rule, right? The 80-20. Of this software, of these widgets that exist, I would say 20% have any real concrete, unique viability to them. The other 80% are cookie cutter indicators. Much of what unfortunately is sold as expensive software is based upon what I shared with you, which is a 10, 20, 50 moving average model with volume. So I'm anti-big software. My goal is to give you transparency. I show you many tools that are free. I'll go to bar charts and use some advanced option screeners for free. I use ETF.com, which is free to dive into exchange traded funds. So you get to pick up some additional resources just being in the room. And my goal is to not create this huge, expensive bill every month to just trade the market, right? So let's focus on trading results and learning how to anticipate and read momentum and pattern breakouts. You know, the strategy today is the tip of the iceberg. The interesting fact about how we put it together is that we deploy the same method on individual trading, right? So we're going to drill down to find individual setups. And at the same time, we'll go and look at what's the SPY, where's the S&P 500 a week from now, 2 weeks from now. Well, the bounce down that we just had today, we talked about on Monday night. We talked about the fact that we're going to stall out here, find some support leading up into the fundamental announcements coming up. We've got PPI tomorrow. We got CPI on Thursday. Friday, we have the University of Michigan Consumer Sentiment coming out. And we've got more next week, right? This is a crucial month of economic data. We've got November 2nd is the next Federal Reserve meeting on the federal fund target rate. Right now, the probability is to another increase of 75 basis points. Well, then you have midterm elections on the following week. So this is a perfect time because we're anticipating volatility. I already have a game plan out to my traders of some of the key indicators that we're watching for the next move. Already have it laid out. Energy is on the top side of the 50-day. Next bullish bar on oil, we're going to be taking full advantage of that upswing. We have a couple positions open now in energy. I foresee us rolling in a lot more here in the coming weeks. So timing for us retail traders is better than ever at this stage because we're already so bearish. There's so much overselling happening. You're going to see, just like I saw back in 2020 when we turned back on from the COVID shutdowns, same thing we saw back in 2018. We had a 4 or 5 month bearish market. You go back to those time periods, you pull up the method I shared with you today, you will see precisely when the reversal happened. So we're going to be seeing it, and on top of the market reversing and getting into recovery, we'll see it. And then just like we saw, if you remember the beginning of the year, we saw the SPY, the NASDAQ, all the major indexes go hyper bearish. There was one sector that went bullish. That was energy. So we were trading all sorts of energy stocks, buying calls on that strong breakout rally when everything else in the market was going hyper bearish. The way we identify that is using the same charting setup that I shared with you today on those high level ETFs. So then we drill down into individual stocks. All right, so Linda, I see you just signed up. Perfect, glad to have you. I'll just go through and make sure I didn't miss you. If you're going to the sign up page, let me know. If there's any questions on the checkout page, let me know. If you type in rapid profits method, It'll take you to a redirect for Investorexpo. So it's a special page we have for you. Make sure you type in Matt 100. What is the worst you're gonna get? Like, I don't know. I just think about the last time I went to Sam's Club, I spent $200, right? $199 for an entire year. You break that down, that's less than what, $20 a month? I don't even know what the monthly is. Remember, that's 200 hours of sessions with me, 200 hours worth. It's a lot of time to develop, to understand this market, to maximize on all the various different ways of profiting no matter what condition we're in. There's a strategy for almost any condition out there. I just don't know what else, you know, I've done this a long time. It's hard to come up with a really good objection that is not overcome by opportunity cost, especially being such a low price point. Question I see here is, what's this price next year? As long as you're active, you lock in the price. It's an annual subscription. So over the next 12 months, if you like it and you signed up for $199, well, next year you'll pay $199. If you locked in at $299, it's still an amazing, phenomenal deal. At $299, then you'll pay $299 next year. If you refer friends or family members, we're going to give you a 10% off. So everybody you send over, we'll knock it down 10%. We have an existing referral program. So the more you refer, the more you save. You can eventually get down. We don't pay anything for it. We have several clients that don't pay anything because they've referred so many people, right? So it's not a difficult process. No, these are different. So I got a good question. Is this the same as your Market Pro Live? No, they're all unique. So I run multiple signal services. I've got a low cost stock. There's an options profit generator program. They're all unique. There's no overlap to any signal of mine. They're all picked and they're all sent out for specific reasons based on the program. The rapid profit method is more flexible. So I'll go out of the money. We'll look at low cost, small caps, you know, explosive types of stock movements, something like the options profit generator or the Market Pro Live signals. Those are more into the 65-75 delta. Those are always in the money starting off. They're more larger cap, generally speaking, right? So there's just different parameters that we use per program. So I always look at anything I provide as additions to. I don't like to replace anything, meaning duplicate, send the same things out to multiple groups. It's not really, to me, powerful or relevant to send the same thing different ways. So every different program I facilitate is specific and has its own specific rules for what qualifies for that group. So this is the most diverse, I would say, of the signal programs. We go stocks. Stocks has just not been ideal, so we haven't had a stock signal in a couple weeks. We look for very specific stock settings and stock criteria. So I like to hold and use multiple targets. And the situation's got to be ideal, but all in all, they're always unique, always unique. Yeah, so the rapid profit method, so we launched this over the last several weeks. So that's the track record you saw. It was over the last, I think it's like 6, 7, 8 weeks now. The total results in 2020 is a combination of every signal program that I have, right? So that's over 3,500 net pips, or net percent profits, not pips, percent profit over those 2 years. The reason we launched this, a very specific vertical of types of signals, is to take advantage of the current conditions, the flexibility given. So that's where this was born from, was an opportunity to really combine all of the strategies and all the different ways that I trade into one program, and that's what this is. And that flexibility has been important here recently. You know, the reason, you know, our average hold time is like 10, 11 days, and that's intentional. 10, 11 days versus more of a longer 2-3 week hold. Those are generally more in active trending conditions. See, right now, though it may feel like we're actively trending down, put trades, bearish directional options are never as profitable as bullish calls. just in a flat defined basis. Puts are more expensive than calls, okay? So being on the bear side naturally. Well, when implied volatility is high, as it is now with the VIX over $30, what happens is now that premium is really high in the puts. So it takes a lot of bearish movement to make a high profit on the premium. I'll explain more of that in class if that doesn't make sense. If you have any decent knowledge of options, you know what I'm saying, okay? So that's why when people think of a bearish market, like, oh, just buy puts everywhere. Well, you still need the ideal condition to buy the put. You need enough of that price movement, like eBay is like a 13 or 12% profit target because eBay's implied volatility is high, the VIX is high, the eBay premium's higher. So for us to make 60, 70, 80% on the option trade, we need eBay to go down more of a percentage move than if we were in a bullish move for eBay. All right, so that's why it's not always cut and dry to say, oh, bearish market, let's buy puts. It just doesn't make sense at times. And I'm going to show you the formula. I went over it last night. I had a formula up, spreadsheet up, showing people how the method works of how to identify opportune puts, opportune calls, just putting in a couple data points. You know, so those are some of the added educational pieces and learning that I go through. But that's why it's never just a, hey, market's down, buy puts, market's up, buy calls, because we're finding calls even in this overall bearish market. And I always prefer to find buys over a put. You know, I always look for buys first because it's usually better price and you have a better opportunity to maximize the return on that trade. Yeah, average length of trade as of late has been about 11 days. Over the last several weeks, it's been 11 days. Historically speaking, it's about 3 weeks, 21 days. Now, some are longer, some are shorter. We're talking about over 350 some odd trades. Average investment on the option side for the buy, sell, and hold has been under $200 a contract. So the average premium is under $2. I typically stay under $5 a premium. You know, maybe I'll go to $6, but it's got to be a really good pattern. It's got to be a strong pattern. To the smaller priced symbols, you know, if you think about a $10 stock versus a $100 stock, for the $10 stock to move 10%, which is $1, it has a higher likelihood historical percentage chance of happening. A 10% stock price move on a $10 stock than a $10 move on a $100 stock. It's just historical percentages of likelihood. So that's why you'll see such a lower average premium, because the breakouts, the multiple breakouts of that option premium increasing is usually found around those small mid caps. You know, if we're talking about something like Apple or Microsoft, we're gonna have to see some good 5, 7, 8, 10% moves to generate triple-digit returns. We could find something that's in the tech space at a point of breakout, you know, that's $20 and get the same return without the larger premium cost. So, but we'll break that down. You'll see how you can apply this not only on the signals I send, but also how to apply these different calculations and criteria around your active trading now. You know, my goal is to not just give you signals, but to really help your overall trading. Now, remember, in a certain day, when you run a filter, you'll find 80, 90 stocks that meet the criteria. So if you want to trade more, you can trade more. I'm going to send you my top picks, but that does not mean those are the only picks that are available, right? So you're effectively, every time you run your filters, if you're looking at aggressive bullish breakouts, I'm going to see exactly what you see, and you're going to see what I see. And that's what helps the learning, is because as you're looking and I deliver a signal, you're going to be able to go to the actual filters and see where it came from. You're going to be able to see, you know, oh, there's the profit target. Okay, that's great. I was thinking the same thing, right? Those are some of the conversations that you're going to have. Yeah, so the options profit generator is another option service. You know, the options profit generator is a daily analysis. So we go through daily looking for signals. Those are conservative, typically always in the money. So 65 deltas, 75 deltas. Those are Also historically below $5 premiums. There's some over 6, some at 7, but the average I believe is about $2.65. So way less, well below $500 a premium. So if you want to add more, you can add more. You can also add it later. You can also upgrade and add that ticket later, but to more signals. The reports is, to me, though it may sound like a lot of work, reading them all, there's hundreds and hundreds of pages. If you've heard about Occidental and you've heard about the massive investment by Berkshire Hathaway into that program, buy the report. That's just one of the many reports you're getting for $49. That's normally over $200 that we offer that for. You're going to be able to learn precisely the metrics behind the Berkshire Hathaway decision to buy Occidental. So in essence, you're going to be able to walk away with the blueprint that Warren Buffett uses. He overlays on top of company fundamentals and checks boxes. That's, to me, the big value right out of the gate. The other reports are obviously phenomenal too. Sir John Templeton, world-class, world-renowned investor. You get a deep, detailed breakdown of his method, his learnings, so you can take them as your own, of course. But that is literally huge report styles. They're more like a workbook, volume-wise, hundreds of pages. So if you like the physicalness, if you like to read something, print something, take notes, see detailed data analytics around some of their decision making, you're going to find it there. So huge advantage. Now the offer for the options profit generator is nice because it's the only time it's offered month to month. Typically the options profit generator is sold annually, just like this, but it's $600, $700, $800 or more, sometimes $900 depending upon what the current market is. But so to sign up and get a sense of it for $39 a month, it's a good way to test it out. If you don't like it, of course, you can cancel as well at any time. Okay, but those are those 2 special bonuses you can add on to your ticket. Yeah, I got the question. Yeah, appreciate it, Alan. Thanks for the help. All right, perfect. So it looks like, no worries, Andy. I love it when someone accidentally types in all caps and then they apologize for it. It is okay. I appreciate it. I know you're not yelling at me. I appreciate it. All right, perfect. So let's see here. So if you have any questions on the page, just let me know. Type in your email, type in a phone number if you need help. I've got a team of moderators who are helping. Yeah, understood. So you're going to receive an invoice receipt. Then you're going to receive a welcome email. Inside the welcome email, you'll be directed to the login page for the membership site. The login page does not require a password. Okay, so we use cookies, we tag you, and it's based on the email you signed up with. So that'll come here in the next few minutes. In about 15, 20 minutes from now, you'll then receive your confirmation for our Market Pro live sessions. My live sessions will automatically register you. You'll receive a confirmation of your registration through GoToWebinar. That link will be used for Thursdays at 12, Mondays at 7. So one link, all the classes. We'll be reminding you an hour before. I'd recommend you put on the calendar. If you can't make any of the sessions live, don't worry. We archive them within about an hour, 2 hours of the event closing. We've got a huge library of archived prior sessions. The reason we keep the archive is because we analyze every single session. So basically, if you want to know how we called the June low, go back and watch the June sessions. You'll see us talk about what it's going to take to get to the top of the 50-day moving average. Go back to the beginning of the year. Go watch January first week. You'll see us identify the S&P 500, the NASDAQ getting below the 50-day. Then you'll see us flip and start identifying the energy breakout, which we're very close to the same pattern. Take now is the time to start. If you want to take the maximum opportunity from the recovery, it's going to take another few months to get to all the markets to recovery, but there will be sectors, I can guarantee you, sectors that will lead us out of this and give us the leading edge. So we can take advantage of reversals in key industries and sectors and let everybody else catch up to us. Okay, it happened before, it's going to happen again. That's how the markets work. So you do not want to miss out. This is the time that you can really get your feet wet, understand how the process works, spend the next week, 2 weeks doing that, and be fully prepared and on page to really drive this process down. I mean, it's truly a phenomenal place to learn. It may feel difficult. You may feel depressed without any hope. I promise you there's hope. Now is definitely not the time to realize and lock in losses. It's time to stay on it, start to build confidence in a different way. There's absolutely no reason these 10 are not off the board. If you're here still right now, what's holding you back? It's $199 for the whole year. I told you I was going to make this as affordable as possible. You will not get a lower price in this. This is not something that we're going to email you tomorrow and say, hey, guess what? You can get this for $50. I mean, there's a limit to how low this is. When I think to how much time I spend, my team spends creating content, 4 hours a week, that's a lot of content. That's 200 hours. The time it takes to develop these signals, send them out, the infrastructure, right? I mean, this is pretty much a extremely low cost that will not be lower. So it's not going to be that scenario. In fact, the highest likelihood is that this is the deepest pullback, and this price is going to jump back up to our normal $500, $700, $800, $900 for the year. So don't look back on this and then come to see this event. When we do open enrollment again, it's probably going to be a couple months from now. And then you're going to show up and I'm going to say, look what we did over the last 12 months. From the percentages, probabilities, if you look back and you join this event like this 2 months from now, and you hear me, you come and see, well, we did 1,000%, 1,200%. You're going to kick yourself. So why not take the next 30 days? Worst thing that's going to happen is you spent a few sessions, a few hours with me, you didn't like it, you got your money back. I mean, it's truly, sincerely, the most affordable and yet powerful way. If you want me to charge you more to make this more understandable for you, then buy 10 of them. I don't know. I mean, if it's too low that it doesn't make sense, then you can buy a couple more if you want, but I don't think it's necessary. I think take advantage of it. I promise you, if it made sense, right? If you saw how momentum worked, how we started to build up and basically jump on the back of the 10-day moving average, then as you watch the price shift down below, how we started to extend down again, if that made sense, then you're halfway there, if not 75% of the way there to truly understand the whole picture. Now, if that didn't make any sense, then maybe it's not the right time. Okay, so this is truly not for anyone. If it made sense of how we were looking at trend, price moving above and below those trend lines, then stacking up volume, that's literally 70% of the entire process. The only thing that's missing is how do you set up entries, what's the best place to pick profit targets, and then how and where do you set your stop loss. That's stuff that I teach in the empowerment toolbox, right? But that's why I start with that concept. So it's kind of like a litmus test. Not everyone's visual, not everyone can have that spatial intelligence, and that's fine. But if that made sense to you, then I definitely recommend and I highly encourage you to join the dozens, now we're well over 10, dozens of people here that have signed up. There's still spots left, but this is not open forever. I don't like to have random people join at random different times. So look at it as like a school set, like school. My kids are 3rd and 4th grade, right? You've got a quarter, you end the quarter, you start a quarter, right? You have a school year, so all the kids start at the same time, you end at the same time. That's how I like to schedule in these open enrollment sessions. So we need new blood, we need new people, obviously, but then we cut it off and don't take any more people, because I want to take those people through the next 6 to 8 weeks and give them all the attention of building them up to be a momentum trader. So it's not something that we just keep open, the doors open, come when you like. It's strategic, and I just find it's better to have sessions where we open the doors, we have a group, okay, then we go. Okay, so that's I just want to give that out so you know that this is not something that we just have open all the time. You know, if you want to wait a week, 2 weeks, it's better just to start, let us know you need a break, we'll pause it, and then we'll start it again. So at least you're locking in the price. At least you know you can be in without any risk of not being a part of it, right? So I just want to give you some of those tips. Yeah, make sure you go to coupon code, right? It's in the middle. So it's MATT100 is the coupon code. MATT100, it's right on the screen in front of you. And then that will take you to the checkout page. Now, when you get to the checkout page, just hit the middle button. It says like add to cart. That'll take you down to the actual form. And then on the form, it says MATT100 right in the middle. And that's where you're gonna wanna be. Yeah, fantastic. Yeah, it looks like we've got, yeah, so a couple of people got the $299, but I see that the support team here is working through it. So it looks like they're gonna honor the $100 off for you. So that's good. I see that communication going on. Yeah, so you can see the, these are the closed trades. Everything's transparent. You know, I got questions, talk about trade this and trade that. Here they are, they're all in front of you. I'll pull them up here, you can see them. You wanna go back on your charts, go plot them. You wanna go put it to the test, that's fine. Everything's tracked. You can see how we have all the tickets, all the data. So we literally just set up the trades and they trigger as I send them full details on the emails. So you know exactly what to do, when to do it. So these are all the closed trades here. So there's your Devon Energy from August 12th. We triggered 913, exited 94%. You've got Jern, got in at 828 or 814, profited 914, closed out 120%. New Holdings got in 815, profit 96%. Right? Go look on the charts. Did this go down? You know, you have access to the entire tracker. Go cross-check it if you want. I get it. All laid out here in front of you. Open trades above. eBay, Crescent Point Energy, Trip. Okay. So you have all the active. You have close below. All transparent. All laid out in front of you. So if you trade $1,000 a trade, right? $850 here on Revant in just 4 or 5 days. Did that cover your $199? Of course it did. I mean, I really truly do not understand any type of indecision, because it's momentum, it's about focus. So I see a lot of you are jumping on board, and ultimately I appreciate it because you know what return on investment's about. I'll tell you this, most of the people that really enjoy this program are those that have at least a few months of experience. You place trades, you know, you may have paid for education, or maybe you paid for it through the School of Hard Knocks. You have some understanding of what a stock price is. You have some understanding of how options and stocks are connected. And you've been around the block, and you've had experiences with companies, you've had experience with process, strategy. And what I've shared with you really gravitated towards you for a simplistic, momentum-based approach. So I know there's a large group of you that know opportunity, you know this is different and unique to what you've seen. And I appreciate you giving me the chance to take you through this journey, at least over the next 30 days. But I know if you watch one of my live sessions like Thursdays, or maybe you have to wait till Monday night, I guarantee you'll be hooked and you'll love this. For those that are still waiting, look to these trades and ask yourself, have you been able to capture this much over this time frame? If you're in an event like this, the likelihood is answer is no. So this is a tool, it's a resource, it's not the only thing. It's not just placing these trades, because if you don't know how these are placed or why they're placed, then odds are you're going to go into a self-management freakout mode, meaning you're going to see a pullback and then you're going to abandon ship and close manually on your own. So the reason I encourage you to also not just take the signal, but understand how the signal works, is so you can manage your psychology as the market extends, retraces, extends again. the reason I love the hands-off trading style is that we don't have to manually watch P&L and then hit a button. We remove ourselves from that and we have it laid out in front of us. Odds are the emotional side of this is where you're getting into trouble. Emotional decision making is where you're getting into trouble. Here's all the rest of the details. It's out in the world. These are emails, these are text messages. They're obviously here. You can see the trade tickets. It's all laid out. So it's easily tracked because it's what happened, and we have the stamps of everything of when it happened, right? So that's why $199, it's real. I think they lifted the $100 limit or the 10-person limit, I believe, based on the comments. So if you're on the page, maybe you're a little slow, just finish the page, check it out, and we'll be ready to go. All right, so at this point, I'm just gonna review the questions and make sure I didn't miss anybody. So I think, yeah, support's helping you. All right, so let's see. Yeah, I think I got the questions. All right, so remember, this is what's gonna happen. Today is Tuesday. We're gonna see you live again Thursday at 12. Okay, so Thursday at 12 p.m. is our Market Pro live session. For those signing up, you'll be right there registered here in the probably next 10-15 minutes. You'll be registered automatically. Then you'll get your confirmation. Hey, the rest of you, at this point, we're gonna have this open, I think, a few more days. So we'll work with Investorexpo and Anna here and Alan, my partner here, to make sure that we make this at least available for the next couple of days. After that, this is going to be closed. You know, we've been opening up this enrollment. You know, we already extended it once based on feedback, but I don't want to, you know, extend it further. So you do have a couple days. If you're not quite ready, if you want to watch the replay, you can go watch the replay. But this is definitely an opportunity to really change the trajectory. And once again, if you enjoyed the way I taught, the method of explaining, if the words understood, if the tempo worked for you, the strategy is the simple part. What I find most often is you see something you like, you see a strategy that seems interesting, but then as you get into the program, you can't really relate to the coach. You don't have the same value sets. You know, you can't really understand the words they use or the phrasing of how to explain a concept. So a lot of personality goes into really building a long sustained transition, because that's what's going to happen. You look at the market in a certain way, I'm going to help you look at a market in a different way. That transition takes a level of commitment, understanding, and a lot of that can be handled with personality alignment. So if any of that made sense, I'm going to leave this open. I've got to run, but I will leave this open. I do have my team of moderators here, so if you have questions, type them in the question section. We're still live. We have support here for you. If you need support, I'm going to pull up this number so you have a direct text message access here. So you got our support email. Kim and Linda are fantastic. I've got Alan also helping facilitate right now. And then we have our customer service number there. So if you need anything, you can reach out to us. But at this point, I don't know what else to really walk you through. I only have so much time in these events. We've gone 2 hours. This is, imagine Market Pro live sessions. We do this, but there's no intro. There's no obvious introduction here to the program and the price. It's all about the market, and it's all teaching, diving in and understanding what the pitfalls are, where the opportunities for trading are. So if you like that concept, then you're really going to enjoy this experience. So I'm going to leave this up. Go sign up if you haven't yet. I don't know what else we need to give you. If you have a question that's not understood, let us know. We'll answer for you. $199 per year is a phenomenal opportunity. Don't let it pass you. Okay, so you do have a couple days. I think I just read that from my team. So if you need a replay, we'll get it to you, but you've got to be able to make that decision. If I send you a signal at 7 o'clock at night and you spend 15 hours reading it and trying to overanalyze it and cherry pick me, you're going to miss out on opportunities, right? Same concept here. I'm giving you an opportunity for $199 to get a return on that $199. If it's, you got to, that's what I'm going to show you is how to take action, and it's got to be timed so we can catch the breakout. It's the same concept. You've got to be able to see it, place it, and go. That's what I'm going to deliver for you. Okay, so for those that signed up, you get it. For those that aren't ready yet, go back and watch it if you need to. And then other than that, we'll be back Thursday at high noon. So appreciate you all. Happy trading, and I'll see you in our live session.